Hello everyone, it's Evan here from the Trade Risk, and this is your stock market weekly update for Friday, March 1st, 2024, episode 721. Hope you're doing well out there. Thanks for tuning back in here to our weekly series, and let's get into the headlines. Fairly unanimous bullish headlines to talk about this week. Russell 2000 front and center here, closing at 2-year highs. Not as impressive as the Nasdaq or the S&P, which is up at all-time highs, but the Russell 2000, it's been a long while trying to get its act together. It looks like this big range is turning into an accumulation type range as we threaten those longer breakout levels. We've talked about the Russell 2000 a lot over the last few weeks. We'll do a little bit more of that in this episode. New weekly all-time closing highs, weekly closing highs for gold, GLD ETF. That had an impressive session here on Friday. Big volume coming in as that shiny metal gets back up towards its all-time highs. Bond market starting to make the turn here. We talked about this trade thesis last week and the longer duration, really the TLT type duration for the bond market. But now you're even seeing it spread to more IEF for the mid-duration bonds as well. So it looks like a new leg up is trying to start there. We're going to look at those charts. Bitcoin had a huge week. New monthly closing highs for Bitcoin. February short month probably helped it get there, but getting real close, about 10-15% away from its intraday or its daily all-time highs for Bitcoin. And really everything here leads us to say things almost feel a little too good. Everything seems to be working right now, and we're going to talk about that. We're going to see if we can debunk and figure out what could break some of these narratives. So we got lots to talk about today. Stick around. We've got some charts coming right now. All right, before we get into the charts here, I want to make a quick announcement that this coming Monday, that's March 4th, 4 p.m. Eastern, at the market close, I'm going to be hosting a webinar to debut a brand new trading system that we are releasing public here. This is our third trading system. We're very excited about it. It's been a long time in the making. It's very rare that we release a new trading system. We only have two. One that released, Merlin, that released in 2019, our Lamerick trading system in 2021. So it's usually a few years in between where we get enough of a novel idea with enough research and testing behind it that a new one comes to market. So Galahad, that is what we're talking about on Monday. So I invite you, there's a link in the description of this video to register if you're interested. Trend following type system, long-term trend following, trades ETFs exclusively, including the new Bitcoin ETF. So if any of that sounds interesting to you, if that's how you like to manage your portfolio or something that you'd like to access, then I do invite you to join the webinar. It'll be pretty short, 30-45 minutes. I'll bring some questions. You can see what we've been up to. Even if it's not for you, you might be able to learn something with some of the research that we'll share with you. So excited for that. Hope to see you there. Not going to be announced anywhere else on social. So this is just for our email subscribers and if you're tuning into our weekly YouTube series. So let's get into markets now with that link in the description of the video to register for that webinar. So we got some charts in front of us, TC 2000. Let's get into the numbers here. Right-hand side, 1 week returns. Take a look at this. Everything green across the board. Dow was basically flat. S&P was up 1%, Nasdaq up 2%, and then the Russell up 3%. You get a nice 1% stair step in between each of the major U.S. indices. That's cool to see. You can see on the 1 month returns, pretty even race now. So S&P, Nasdaq, Russell, all basically up 6 to 7% over the past 20 trading days, 1 month of trading. If we take a look at volatility this week, both coming down. So that's Nasdaq vol down into the low 17s, and now the VIX back down to the low 13. So you're seeing just a little bit more unwind, a little more complacency sort of set in here as markets move higher. Now, if we take a look here at market sectors, you can see most things were in the green. Technology back to leading the pack here. Real estate in the second spot. We talked about real estate. That was one of the turning point sectors we identified in last week's video. So let's, kind of move into that and take another look at that in this week's video. Consumer discretionary rounding out the third spot. There were 4 sectors in the red. Communication services basically flat, but marginally red. Healthcare, consumer staples, and utilities. Really your perfect bottom 3 if you're thinking about risk appetite and where the market is leaning into risk or growth or trying to get that exposure. That's exactly what you want to see at the bottom, is the very defensive sort of sectors of the market underperforming. If we take a look at our sector trends here, there's not a whole lot of change except for that real estate. So XLRE here, you can see just trying to turn back up, make the corner here, and that's been in sort of a slog, sideways down, mostly down since December. So that's nice to see here. Everything else pretty much just kind of extending its uptrend. This is our trade risk smart trend filter indicator here. So we have this available for you TC2000 users and TradingView users. Let's take a look at market breadth, something that is a lot more encouraging here now underneath the hood. Take a look at this down below, number of NYSE stocks at 52-week highs. You can see we got a new high reading here on Friday. Once again, if you're on a different charting platform, all these numbers are always going to come in slightly different. However, what's important is just the kind of trajectory and the cumulative sort of move here. And you can see we are now getting a little bit more of an expansion and uptick, a thrust here in market breadth. That's what we've been wanting to see. It's what we've been kind of waiting for, and it seems to be taking place now. 52-week lows pretty much you know, just kind of stagnant, kind of dried up here at you know, the low 50s or so, and that's also positive to see. You can see also that we did get kind of we're starting to get a nice move up here in the percentage of stocks over a 200 SMA again, starting to, you know, reach back up. And as we've been, you know, identifying over these past couple of trading updates the past couple of weeks here, NYSE Composite Index continues to, you know, make new highs here. So constructive to see, not a tradable index per se, but nice to see in terms of market breadth. Now, IBD, Investors Business Daily, they are a sponsor of the show, so thanks to them. Thanks for our sponsor here. This is their top 10, their IBD 50 list, and we curate the top 10 here and take a look at how they perform this week. And you can see, once again, just a tremendous amount of green, double-digit green on this table here. And you can see their top-rated stock, GCT, continues to perform here, up 22% over this past week, up 77% over the past month, up 700% in the last year. Some just pretty epic numbers here, but an impressive list here. Stocks do update pretty much every day, so you can get access to this list with a link in the description of this show. Now, let's move on to commodities here. And the dollar, you can see at the top of our list this week is Bitcoin, up 23%. Really just saw a big kind of breakout surge after its tight consolidation pattern. We saw natural gas actually moving up this week as well, along with oil and gold. So we had, generally speaking, a very positive front here in terms of commodities, and the dollar index was flat. I mean, it was trying to move up earlier in the week and then kind of gave back some of those gains. So that's good to see. We've been looking for that dollar to sort of roll in some of these recent videos that we've been looking at. Now, if we move on to Treasury yields, this is where things get interesting, because we are now starting to get a little bit more of a convincing sort of rollover here. If you take a look across these various durations, you can see that we kind of put in a little bit of resistance here. We're starting to roll back over, and this again I think is constructive to see from a risk appetite perspective on stocks. So we're going to continue to monitor this. This is what we've been, you know, kind of hoping for. Dollar starts to top out, yields start to top out, start to see some of that rotation, breadth expansion, risk appetite come into the market, and so far so good. So let's get into some individual charts now. We're going to start it off with the S&P 500 weekly time frame, making new highs, going out here above 5,100 for the S&P 500. If we throw Bollinger Bands on here, take a look at this beautiful chart, daily chart, just kind of riding the upper Bollinger Band up as it expands upward. If we go to the, I'm sorry, this is the weekly chart. If we go to the daily chart, you can see a pretty similar formation, not as stretched, not as, you know, uplifting of a breakout type of move here, but you can see now starting to bang its head after, you know, deservedly a almost 1% move up here on Friday, starting starting to run into a little bit of that stretch territory. So when we look here at the S&P 500, we're continuing to see this digestion primarily through time. So we're not getting these big fierce pullbacks. We're getting these very sideways, kind of sleepy, smaller range, just digestion here, as there's not a whole lot of excitement on the sell side. Just really can't generate enough volume or break down any key significant levels. And so just like we saw over here about a week ago or 2 weeks ago, we do see now just another breakout, consolidation and another breakout. So we've got this very kind of, consistent pattern going on here. Is very similar back in late December, early January. You get maybe about a 1 or 2% pullback at most, and then you slog it sideways, digest through time, and then it kind of breaks out and has a lot of these little, I will say, in terms of the character of this market, we are seeing a little bit more of these sharp sort of one-day moves. So take a look here, for instance, at the end of January when the S&P was down 1.61%. Take a look again just a couple weeks ago on the 13th of February, where we had the S&P down here 1.37%. So we're seeing some of these knee-jerk heavy sell days again back here at the end of December. December 20th was down 1.5%. And I think this is doing a very good job at getting or just keeping people 1 foot out the door in this market. This was something in the live stream I did this week with Aaron Jackson and Tommy Lackey. And we talked about this, kind of picture perfect scenario where everybody knows they need to be invested, is Tommy's words. Everybody knows they need to be invested, but they're sort of scared to do so, or they want to manage risk. They're afraid that we're going to see a correction here, all for rightful reasons, right? Because we've gone on such a big move, but this is the type of market that continues to just grind, keep people worried. And these types of, kind of violent sell-off days, you get a lot of people that move to the sidelines, maybe get hedged, sell some positions, no follow-through action happens, and then they, that bid just appears, grinds sideways, and then breaks out again, and you're kind of left behind if you're responsibly managing risk very tightly, let's call it, okay? So you're kind of getting paid to be a little more patient here, a little more relaxed to just try and ride this trend. So here we are, S&P 500 breaking out to new highs. Again, we're going to just kind of continue to monitor these clear kind of horizontal levels until and if the S&P can start breaking, at this point, I guess 5,000, if it starts to lose 5,000, which is, again, only a couple of percent here, 2% down. But if it starts closing and making some follow through, heavier volume, abrupt gap downs, type of, turning point action, I think you still need to respect this uptrend, which continues to grind up. We've got the Nasdaq 100 here, very similar situation. This is surprising. Last week, when I looked at the Nasdaq 100, my thought was that this gap would get filled here, right? That was my anticipation, was when I believe I said it on Friday's video here, where we, just tried to close at new highs, but we couldn't quite do it, and the Nasdaq 100 was a little relative weak play. And we basically, talked about this thesis of maybe large cap seeing some profit taking, seeing some rotation, and then that small cap, mid cap stocks to get a little bit of rotation, some love, some outperformance. And my bet was we would see the Nasdaq 100 sort of fall back down here, fill this gap, and then maybe just kind of slog it sideways, not necessarily selling off aggressively, but just kind of go sideways and digest. And we did go sideways and digest all this week. We went really tight here between, call it 434 and 439. I shared a chart, I believe, on Thursday on social media that basically said, looks like this consolidation through time has kind of done all of the healing, the correcting that we needed, and it looked like a squeeze now was kind of likely to come. And lo and behold, of course, on Friday now, in hindsight, we've got this nice breakout expansion bar, 1.5% move. So this game continues here. It is climbing the wall of worry. It's digesting technically, when you look back at this rally, you just really have to appreciate and kind of love the path that the market has taken here to kind of throw a lot of people off sides and then just keep kind of grinding up in a little bit of a sneaky way, I guess, but continues to just really work here. Russell 2000. So let's take a look here. You can see not quite getting the big breakout, but we're certainly getting, certainly on a weekly chart, you start to get a nice kind of move back up to the upper end here. Going to go all the way back to the start, really first quarter of 2022 to get back to these levels. But notice now we're working our way back to the upper end of this range. We closed at new weekly kind of cycle highs here, and things look pretty darn good now for the Russell 2000. We're starting to see just a little more kind of breath come in, a little more affirmations in these stocks, a little more uptrends and just consistency here. So we're going to continue to, play out this trade. I still think Russell 2000 can see a big next month or two of relative outperformance. That would be helped if we do continue to see these interest rates fall, if we do see the dollar kind of soften up, and all of that kind of goes hand in hand here. But I like the action in the Russell 2000 and still expecting some good action ahead. So let's see if we can get a little more follow through, a little more convincing, push up and start clearing above some of these old levels, but things are in motion. So that, I think, is everything I wanted to cover on the individual the major indices. Let's take a look at gold here, which I think just had a super impressive week. So this is the weekly chart for gold. Take a look at this action here. Let's look at the monthly chart. All right, so this really starts to put things in perspective. Gold hasn't gone anywhere since 2020. It's been digesting now for, the last 3.5 or so years, and it's finally back up to these prior highs. It's pretty, fueled up here. It's not stretched. It's not too extended. It's gone through a little bit of a consolidation period. And on Friday here, take a look at the volume that came in, one of the heaviest traded days in a very long time. So we have a nice kind of expansion range up, breakout session, heavy volume coming in. Looks like gold wants to continue to work here. So, let's see if this can get some more legs and start really manifesting, breaking out on those longer term time frames. Do have a position in gold here. In fact, our new trading system that we're going to be talking about on Monday has an allocation here into GLD. So gold looking good. If we take a look at TLT, and this is kind of what we eyeballed last Friday when we did our market video, TLT trying to make that turn. And again, it still looks like it's trying to turn up here. Here's the weekly chart. So you can see now we are above last week's and the prior week's closing prices. So you can see, again, needs a little more oomph, needs a little more energy. It doesn't have that big breakout volume like we just saw in gold, but it's trying to very slowly turn the corner here. And again, I think this will help a lot of that risk appetite case if we do see some of these yields start falling in the TLT, in the IEF, right? 7 to 10 year mid duration here. You can see kind of breaking out above last week's highs as well. So let's see, again, weekly chart like we talked about last week. We had a nice impulse leg up from the October to December, swing point there, 9% up, had about a month or 2 months really of a nice pullback here, and now looking for that higher low and move back up. So let's see if we can get it. Moving on to oil, also very nice big week this week, 4% up. It's been kind of in consolidation, been kind of an interesting trade here. Haven't been paying too much attention to it personally, but it is clearly breaking out now of this little 73 and a half resistance that it's been bumping its head up against. So congrats to the holders there for USO. We are going to look at some energy stocks in a little bit, so that's clearly helping the case there. Let's take a look at Bitcoin. So Bitcoin this week was the breakout week for it, as we had this nice tight orderly range. You can look at, this is the Bitcoin spot price in TC 2000. You can also look at, for instance, IBIT, which is kind of the leading ETF now for Bitcoin. You can see we had this nice tight range here, and now we had the subsequent breakout to really just start the week. I mean, we came in really flying on the buy pressure here for Bitcoin, breaking out almost 7% on Monday, and then it was basically follow through, and now we're digesting again. So again, from a technical perspective, Bitcoin continues to work. I think by now everybody knows it's probably one of my favorite trades, continues to be. I think there are fundamental reasons why this, or flows reasons, structural reasons why this is, you know, getting a lot of love and attention here. And I think that trade has some time to play out. So Bitcoin, long it, have a position, and continuing to hold through it. And I think that's everything in terms of major markets. We can run around the horn here. Nvidia. So this reported earnings, of course, last week. That's what the market was waiting for. We get that nice, you know, kind of accelerant catalyst after earnings. We digested nice and tightly here for the next 4 or 5 trading sessions. And then on Friday, here comes the momentum back into this market, new all-time closing highs. And I think it tripped above, or closed above, $2 trillion market cap for the very first time for Nvidia. Congrats to the buyers and bulls there. I do not have a position. I have positions in Qs, so I guess informally I am cheering this on, as it's a larger weighting there. XLRE, we wanted to talk about that. This is the real estate sector that we started to identify last week. Again, hasn't really gone anywhere for the past year and a half, but starting to make kind of that weekly broader kind of turn up. Got a slight increase in volume this week, particularly over the last 3 or so trading sessions, and this is looking like it wants to move back up to the cycle highs here in December. So real estate, nice kind of turn up there, adding to the bullish market breadth. Let's finish off this week with our strongest and weakest sector or layout analysis. Again, if you're a TC2000 user, you can get this on your platform. But when we take a look here at the strongest sectors now, over the past 1 month, we've got technology back at the top of the list here. So it had mostly been healthcare, biotech, really kind of at that top spot. And now technology, with this Nasdaq surge and a lot of the performance this week, is back to the top of the list. But take a look at this column here for the sectors at 1 month highs. Again, this goes to show the, you know, just the broad-based sort of participation amongst all of these sectors. Take a look at technology here. Huge candle up, 1 month highs or 52-week highs. Consumer cyclicals, new 1 month highs. Industrials at 1 month highs. Basic materials, right? This hasn't been trading, you know, that great over the past couple of months. It's been kind of a little bit of a dog, but now starting to break out 1 month highs. Energy breaking out to 1 month highs, has been consolidating. Financial services starting to break out or close at 1 month highs. And then real estate, like we just talked about, 1 month highs. So we've got lots to like about here. It's a little bit scary. It's a little bit eerie because everything, again, seems to be working. And I think that really is kind of the most bearish thing right now, is that everything seems to be working. So what stops this thesis? Of course, we got elections that will quickly be in markets kind of attention focus here in the next coming months, but we still have a little bit of time until that. Seasonally, you know, seasonality wise, February is supposed to, or especially the second half of February, traditionally a very weak month, and the market here just kind of pushed right through it, ignored it, and again is closing up at these highs. So I think you need to enjoy the market while these new highs are sort of in motion here. Know your levels, don't be complacent, but I think you need to kind of respect the trends that we have here. Breadth seems to be expanding, dollar seems to be rolling over, interest rate expectations seem to be kind of rolling over. It might have that Fed cut. So we'll see what is the next worry for the market. But for now, life looks pretty good here. I want to know your thoughts. What am I missing? What are we missing here? What is the bearish catalyst here? What gets us worried or gets this sell-off in motion? Let me know your thoughts in the comment section below. And I want to thank you again for tuning in every Friday, long-form market analysis video just like this. Links are in the description of the show if you want to join that webinar on Monday, 4 p.m. Eastern. Register in the description of this video. You can check out IBD's links and our own TC2000 store links in the description as well. Have a great weekend. Thanks, everybody, and we'll see you back here next Friday.